Alrighty then. Now that the holiday hoopla has come and gone, it's time to get busy. Most of the institutional traders have finished up their holidays and are back to commuting all over the world to provide us market volume we need for nice trendy trades. Looking at the VIX, we can see an uptick from the last month when it was decidedly lower than October and November. Remember, we're just looking for 8 as our lower limit without making risk adjustments. It's in the green, so that's a good sign. This week, we're going to take a look at a below chart, zero cross, or possibly a mid-cross confirmation indicator. Our profiled indicator for this week, called the Chartmill Value, was developed by a Belgian gentleman named Dirk van Dijk in 2013, not to be confused with the American actor Dick Van Dyke. A quicker acting C1 indicator, this particular little gem doesn't rely on moving averages and therefore has reduced lag when reacting to changes in market action. If you missed it, I mentioned it could both be a zero cross or a midline cross confirmation indicator. That information is provided in the blog, so be sure to check that out. Since we're still exploring down under, we'll stay with our Australian dollar New Zealand dollar chart for this week's video analysis. So then, ready? Steady? Time to get back to work. We'll get right to work here with this long signal. A decent run up on that first move, a nice way to start out. Let's see what this short can do. Well, that was a bit strange. Price kept wandering up even though we got that short signal. Although the exit point was technically lower than the entry point, your exit indicator may have taken you out prior to that with the loss. Just testing this indicator alone would have resulted in a win. Mark it in your journal and let's soldier on. We pointed this out in the blog, but occasionally this indicator will pop from one side of the zero line to the other and close before returning to the original side. Record the trades and press on. And once again, we decided not to slow this indicator down so we could show you what it has to offer, warts and all. Okay, we had a few jitters there. Let's see if we can't get a trendy trade to hang our hats on. We had a bit of chop, which gave us a few signals. Given that price was fairly range-bound, the rest of your algorithm would have most likely kept you out of those whipsaws. Let's keep going. We finally had some decent price movement, but did you notice how the indicator came down to touch the zero line a couple of times? Had you closed your trade prematurely, thinking it was going to cross and close below, you would have missed out on additional pips before price started to reverse. Stay the course and stick to the rules. Price did fall sufficiently to pull in a profitable trade before reversing, and the indicator reacted appropriately to the market. However, it appears that enough downward movement caused it to cross back above a bit late. Let's see if we can't get anything out of this next trade. Price hovered before reversing, so no win there. Then it started moving down and the indicator followed. With a quick cross below and above, we were able to capture a trade to the north side. Well, it looks like volatility has left the market, so the indicator begins to react to smaller price movements. There might have been a profitable short trade before the reversal depending on ATR. Even though price was wandering a bit north, the indicator still stayed below the zero line and resulted in a nice trade. Funny how the math works. Multiple signals? Not our friends. Remember, we just call it like we see it. No cheating. Just keep score in your journal. There was a nice pop there before price retraced. You'd have probably ticked off on your first take profit level before price reversed, so a profitable trade there. We'll let the last few seconds run out. The first thing we noticed was that crazy reactivity to price. How many times it crossed below then immediately above or the other way around? Those are areas where the uninformed traders with only one indicator will watch as their accounts dwindle down to nothing. But you as an informed no-nonsense Forex and Stonehill Forex trader can smile because you know about creating a system to keep you out of those losing trades. All in all, this indicator definitely has promise if tuned up and should be tested out both independently and with the rest of your algorithm components. Get it from the Stonehill Forex Indicator Library at no cost. The link is in the video's description. And don't forget to explore the amazing deal we struck with Blueberry Markets. We've arranged for a massive bonus for new accounts, so be sure to check out the broker page and click on the landing page link. Free money to trade with is always a welcoming thing. Both MT4 and MT5 accounts are supported. Email your questions to dan@stonehillforex.com and don't be bashful. There are no dumb questions when it comes to learning with us. That's us in a nutshell when it comes to offering financial advice. We don't have it and you don't need it. You've got the ability to make it on your own. A new year is here, capitalize on it. Our only goal is to make you a better trader.